What up, everybody? I'm back, and welcome to today's video on the streaming giant Netflix. They have earnings on Thursday after hours, so make sure you're hitting that notification bell to get notified when I go live to react to them in real time. Would love to have you guys there. The company is set to release earnings, as I had mentioned, and as always, investors are watching this report as it often sets the tone for earnings season and typically influences other big tech giants such as Apple and Amazon and Google. But before we dive into the expected details of the report, let's take a look at how Netflix has been performing in recent years. So hit that like button and let's get started. Since its inception in 1997, Netflix has come a long way from its humble beginnings as a DVD rental by mail service. Do you guys remember when that started? It absolutely obliterated Blockbuster because Blockbuster just couldn't figure out how to pivot. Netflix took advantage of that, and today the company is still the leader in the streaming industry with over 223 million subscribers worldwide and a market capitalization of 148 billion. In fact, Netflix counts for more than 10% of all internet traffic during peak hours. That is mind-blowing. This is a testament to the company's ability to evolve and adapt in the changing market conditions, as well as its commitment to investing in original content. Just like how you've evolved from Blockbuster to Netflix, so has the company. Now, you can make the argument that Disney is larger when you combine all of their platforms together, such as Hulu and ESPN+, but I'm speaking about the standalone platforms, and Netflix reigns as the king of the space. Disney Plus alone just has 164 million subscribers as of the end of this year. But it's not just the number of subscribers that's been impressive, it's also the engagement. On average, Netflix subscribers spend around 2 hours and 45 minutes per day streaming on the content platform. That's actually longer than most marriages, I would say. Not to mention, the company is also investing heavily on original content with budgets of over $17 billion in 2021 and much more than that last year. I imagine this is only going to increase for 23 as well. And this has led to a string of critically acclaimed shows and movies such as Stranger Things, The Crown, and Bridgerton. This has been a key factor in Netflix's success and has helped the company maintain its lead in the streaming market. Netflix's success. Try saying that 5 times fast. Now, I know you're thinking, but wait, Brad, isn't Netflix facing stiff competition from the likes of Disney Plus, Apple TV, Paramount Plus, you name it? And yes, you would be right. The streaming wars are definitely heating up with new players entering the market all of the time. Additionally, the company has been investing in new technologies such as machine learning and artificial intelligence to improve its recommendation algorithms and personalize the viewing experience for users. That's what's made Netflix so special. This has helped the company to continue to grow its subscriber base and increase engagement. In addition to its focus on original content and technology, Netflix has also been expanding its reach throughout strategic partnerships and collaborations. The company has been working with creators in other industries such as gaming and anime to attract new audiences and expand its offerings. Netflix is set to post its Q4 earnings update after the bell on Thursday, and shares of the streaming leader have leapt to nearly 100% gains after the steep drop that followed its Q1 earnings result in late April. Wells Fargo was one of the major upgrades, with the bank's analysts forecasting that the new advertising tier for Netflix is going to be key. And I agree here. The firm sees the altered pricing structure boosting revenue by $300 million in 2023, $1.6 billion in 24, and $3.4 billion in 2025. According to them, quote, "Our conclusion is that 2022 reflected a dip in content share, a lack of original hits for a time, and digestion of COVID sub comparison, none of which should be read forward," the team stated in December, which makes sense. We're not going to compare subscriber growth to the COVID numbers. It's just not possible or sustainable. The company stated plans to invest $850 million in a New Jersey production hub and outlined executive compensation structures. As the streaming market continues to evolve, Netflix's leadership position is not guaranteed, but the company has a proven track record of success and is well positioned to continue its success in the future. And with a strong subscriber base, high level of engagement, and pipeline hit content, Netflix is poised to remain at the forefront of the streaming industry for many years to come. But let me know what you guys think in the comments. What do you think about Netflix earnings? Are you bullish going into Thursday afternoon, or are you staying away from the streaming wars entirely? Also, be sure to tune in live, as I'll be covering Netflix as they report on Thursday after hours. So be sure to hit that bell to get notified when I go live, and I'll see you all there.